Hello, I'm Kim Martin, Director of New Zealand Debt Management at the Treasury. Last week, on the 18th of May, the Treasury released the Budget, Economic and Fiscal Update. Alongside this, we updated forecasts for the Sovereign Debt Programme, so I thought it was again a good opportunity to provide you with an update. First, a look at the economic and fiscal outlook, then discuss New Zealand Debt Management's related funding strategy in some detail. After a period of strong growth, the New Zealand economy is now slowing. However, budget forecasts no longer anticipate negative growth in the year ahead, as had previously been forecast at the half-year update in December. Annual CPI inflation peaked at 7.3% in June 2022. Inflation is now expected to continue easing over the forecast period as interest rates dampen demand. The operating balance, that's excluding gains and losses, is forecast to return to surplus the year ending June 2026. This is 1 year later than had been indicated at the half-year update. Alongside operating expenditure, the government also updated its capital expenditure forecasts. Combined, these result in a residual cash trajectory as shown above. There's a return to surplus also forecast in the year to June 2026. Based on these projections, net debt is forecast to peak at 22% of GDP in the year to June 2024. That's reading off the right-hand axis. This remains well below the government's fiscal strategy ceiling for net debt of 30% of GDP. So that, in a nutshell, is the economic and fiscal outlook that forms the backdrop to changes that we have made to the borrowing programme. Forecasts for New Zealand government bonds in the current year are unchanged. However, future years have been revised higher by a total of 20 billion New Zealand dollars compared to the half-year update. You can see this by comparing the blue lines to the green lines. It's also useful to see the programme in context to history, that's shown by the grey bars. The key drivers of the increase to the programme are spending related to recent severe weather events in New Zealand, other increases to capital and operating allowances, and a deterioration in forecast tax revenue. Changes to the forecast borrowing programme are shown also on this table. You can see planned New Zealand government bond issuance for the current year is unchanged at 28 billion New Zealand dollars. New Zealand government bonds on issue are now expected to reach 192 billion New Zealand dollars by June 2027. Forecast short-term borrowings have also increased. In recent years, we have included ECP in our short-term issuance programme. That's shown the small orange bar on the chart. We anticipate that over the forecast period, we will maintain a minimum of 2 billion New Zealand dollars of T-bills on issue and $1 billion US of ECP on issue, with the balance a mix of ECP and T-bills based on the relative cost and market dynamics. Overall, short-term borrowings as a proportion of our total portfolio will be similar levels to the averages that we actually saw pre-COVID. And you can see that as the black line reading off the right-hand axis of the chart. This is the current portfolio of New Zealand government bonds. The bars on the left-hand side of the chart are nominal, and those on the right-hand side are inflation index bonds. The green bar is our inaugural sovereign green bond that we issued in November last year. You can see we also intend to undertake a nominal bond tap syndication of the April 2033 maturity before the end of the 2023 calendar year. This shows a recent history of our syndications. Historically, individual syndications raised around 1.5 to 2 billion New Zealand dollars each and were held around once a year. However, since the onset of the COVID pandemic, syndications have been both more frequent and larger in size. The recent syndications have ranged in size from 2 billion to 4 billion New Zealand dollars. Aside from syndications, weekly tenders remain the method for issuing the majority of our bonds. Over the past 6 months, we have been offering 400 million New Zealand dollars of bonds per week, with cover ratios around 3 times. That's shown by the black line reading off the right-hand axis. We continue to see solid demand for weekly bond tenders, even during volatile markets. Historically, New Zealand government bonds may have been perceived to be more volatile than some peers. In recent times, though, that's not necessarily been the case on standard measures such as annualised standard deviation. As you can see here, New Zealand is the black line. New Zealand government bonds continue to attract interest from a diverse global investor base. The proportion of New Zealand government bonds held by investors outside of New Zealand has picked up in recent months. Sitting there, you can see around 60%. Our turnover data is also quite illustrative. It shows from the past 3 years a diverse global investor base. Our data shows turnover in Europe is not far behind domestic turnover. You can also see a tick up in the volume from late 2022. Equally, turnover data for our inflation index bonds shows a wide breadth of global investors. Our green bonds. So since the green bond framework was published in September last year, we have undertaken a $3 billion syndication and 600 million of tender issuance into the 2034 maturity green bond. We've also added additional eligible green bond expenditure recently after it was endorsed by the Green Bond Committee in March 2023. This includes around $500 million of green buildings expenditure, as you can see here. This takes the total approved eligible expenditure pool to 7.3 billion New Zealand dollars. Any new expenditure from the 2023 budget is yet to be formally endorsed as being eligible, but once endorsed, they will be added to the pool at future updates. No further green bond syndications have been announced at this time. It remains our plan to publish our first green bond allocation report by the end of this calendar year and our first impact report by the end of the 2024 calendar year. That brings me to the end of this very brief update. Once again, thank you very, very much for your interest in New Zealand and the New Zealand Government Securities Programme. If you would like further information or would like to discuss the outlook in more detail with the New Zealand Debt Management team, please do feel free to get in contact with us on the details provided here. Thank you once again.